Good morning, welcome to Metal Markets on Topstep TV. I'm your host, Market Stalker D, where we finally get my levels that others don't see. Just a random freestyle. Thought it was funny that all of that rhymes. Anyways, if you're new here, I've been trading metals and energies for close to 20 years now, and I joined the Topstep family back in 2015 when I became their first female funded trader. My approach is data driven, so I lean on things like market profile, tape reading, supply and demand, options, gamma levels, and statistical averages to build what I call situational awareness. That's just a fancy name of saying how to find high probability levels where the dealers are expected to do something to adjust their positioning, and that creates our beautiful price action. Now, sometimes that can be mean reverting. Other times, like yesterday, it can be pretty directional, and their activities will amplify those directional moves on certain days. So every session on this show, I'm going to break down what that data is telling us in the metals and energy space primarily, identifying some anchor points and talking through some of the possible hypotheses around them for a possible narrative that I'm looking at. But before we begin, please read the risk disclaimer that Bruno posted, because I can see some people asking about signals. This is not a signals class, and yeah, please have a read through that risk document, and they will all be on the same page. Okay, so I will get to the question in a minute, but first let's do some analysis, right? I have the daily chart for copper, crude oil, gold, just to see what we're looking at. Gold, I would say, is still pretty range bound, but it's really trying to go higher. We do have that same range from yesterday, so they haven't broken out of that. It's still touch and go what they want to do there. And as you will see, 4,800 today is a pretty important level that should really hold if we are to see any kind of continuation. Now, crude oil is interesting for a couple of reasons. I had a look yesterday, and we were opening after that weekend gap straight into this bearish engulfing. However, yesterday gave us a follow through. Now, it didn't smash all the way down, but this is the weekly chart, so it has a good chance of the same kind of continuation, but not before some sort of a pullback, and that's why I'm going to be waiting for a little bit longer for anything crude oil related, because I do want to see it back around at least 100 before I initiate some kind of a position. Can we expect yet another massive day? You right, Bon? You don't like what I'm saying. You don't like. Be quiet. It's a Pomeranian watchdog. Are you a watchdog? Yes, you are. Don't freak people out, okay? Not the time now. Go and lie down. So yeah, can we expect another massive day? Statistically, that's a little harder unless we get some great, amazing news from Iran. So we're gonna obviously keep our eyes and ears peeled on financial juice to make sure we don't miss out on anything. But I do have a bit of a short bias now on crude oil. I think everybody wants crude oil below 100. Nobody really wants it, up at 200, 250. And if you saw what the one of the officials was saying, is that the crude oil prices do not reflect the severity of the situation that we're facing. So, we'll see. But my idea today is that we will revisit ballpark 100, maybe 150 cents before they kind of do anything with it. Maybe it's a case of staying range bound between 100 and 97. That could be something to consider as well. But for now, it's all looking very bearish on the daily chart. All right, let's quickly have a look at copper just to widen this chart. Coming into the congestion areas, which I talked about yesterday. So we're actually about to go through the area that was a high volume node on the daily. and reaching into some lower volume nodes. So once we are at 610 today, if we do get there, or this week, I might want to look at some cool-offs intraday, so a little bit of a pullback, before they maybe carry on the run towards these highs up here at 664.85. So yeah, so it's an interesting rise of copper. Copper kind of decoupled from most things, and even though silver and gold were bullish, I kind of feel that copper was more bullish than either of them, and it sort of followed the amplification of the directional move in equities and crude oil yesterday. Again, statistically, seeing yet another massive day tends to be on the lower probability side, so I'm not going to be like, oh my god, this has been such a great day, let's just keep going. So we need to, like, if you had a massive day yesterday, or you managed to catch, you know, any of the moves that were happening, don't think that that's now going to be the norm. That it's like, oh yeah, today I'm going to do the same thing again. Just know that it's an outlier day, and that if you've done well, well done, amazing, but also make sure that you don't expect the same. So be a little bit more humble, because if you're not, the market will humble us all if our heads get too big. So yeah. All right, let's have a look. And like I said, my XFA is still there. I'm just trying to get crude oil to go to 100 and not do any trades until I know that the high probabilities are going to rise. And so this is why I spent a little bit of time this morning on this combine, just to kind of get my head around what's going on, get a bit of a feel for it, and in the end I basically only have one XFA, so maybe I'll get another couple, we'll see. Alright, so with that in mind, let's get into the intraday levels. So I'm going to drop down to a 30-minute time frame. This is gold, so let's have a look at where we are. And some news are coming out already. We have Tokyo high created around 48.0304, let's say. Tried to go higher, failed, and now we're seeing a bit of a reversal here. Now, the range for Tokyo was fairly muted on gold, so don't really think that I want to be doing Asia lows and reverse, because we have a very nice level just under that at 47.50. So instead of using Tokyo low, I may want to see how price action behaves around the 47.50, which is more important in the options chain. And if we lose that, there is plenty of space to go all the way back down to at least 4,700, maybe even lower, where this wick came from. But we would need some probably pretty negative news. Mo is asking, why is gold moving like that all of a sudden? I don't know. Let's have a look at financial juice together and see whether we can find. Alright, so we did have some earnings last night from more banks, JP Morgan, Wells Fargo. Yeah, so some earnings from banks came out. I reckon that's what that was. So basically, gold is pretty sensitive to bank earnings, obviously, and it is the earnings season. So yeah, I'm gonna say that that's what it was. A little bit of a tape bomb, not quite Trump tape bomb, but the earnings tape bomb. So yeah, it is the earnings season, so keep that in mind. But yeah, nothing in terms of the headline risk just yet. Vital is asking me to show the gamma walls on ES. Okay, I didn't do them on this chart, but I can talk through them. Let me just finish with the metals and energies, and then we can have a look at ES. Gold flash crash. Yeah, this ain't a flash crash. Get off the 1 minute. Yeah. Good bank earnings, bad for gold. Well, I mean, it's good for the dollar, I would imagine, and gold and dollar. They have a bit of a weird correlation that shifts depending on what the releases are doing and what the monetary policy is doing. We all know that back in the day, long time ago, we had equities and gold going the opposite directions. That kind of broke down during COVID, and we were all just absolutely flabbergasted to see gold and equities moving in the same direction. And I was like, isn't this like the biggest risk thing that you can ever imagine, like a pandemic that went through the entire world? And traditionally gold was supposed to be used for protection against inflation and geopolitical risks. Now these days, protection from those two things is cash. So I'm guessing people are bailing out of cash, bailing out of equities whenever things hit the fan. And that's why we're seeing these positive correlations. So just a guess. All right. So what do we have in crude oil? Let's go down to a 30-minute time frame. Yeah. So we have, first of all, the value area from yesterday is a little bit higher. Now, I know that the way Hogue looks at this, he would say that the overnight inventory was pretty flat, so they didn't really do much with it. The way I look at it is how NYMEX is going to open in relation to the location of previous day's value. Are we under it, inside of it, and if we're under, by how far? So I don't really look at whether the overnight inventory went into a long mean reversion. I just want to know whether we're under it or not. And then that kind of gives me something that's called the open sentiment in the way I do things, the Marcus Stalker's methodology. And it just works better for commodities for me. All right, so we are currently well underneath the value, and you can see that in the options we have this cluster of a whole bunch of stuff happening all the way from 99, but because we have some nicer levels up at 100 and 150 cents, which is what I mentioned at the start, that is kind of a good round number where I want to see what happens. Now, it's very likely in this volatility that they may overshoot that, go into this single print here, FVG, however you want to call it, and then spend some time there just to fake everybody out and then go into a reversal. Whether that's true or not, that's remains to be seen, but those are the games that crude oil likes to play. So sometimes it looks like it's breaking out into sustained auction upside, and then Euro close rolls around, sort of that hour in and around Euro close, and suddenly you see this huge reversal. And just by accident, these headline risks and stuff, they always kind of happen in and around that time. So I don't know whether that's an accident, getting my tinfoil hat, but I'm gonna say that there is something to that theory. But yeah, so basically my time to trade crude oil, the prime time, would be pre-market if we already ran away to the upside. Then I like to short it partially into or close to NYMEX open, but not really holding it through the initial balance, because usually what happens is that we try to push away from the London initial balance, and then they return halfway into it when NYMEX opens. So you can't really run swings at that point. If you're kind of basing your crude oil trades to last longer than sort of 4 to 6 hours, you can't really use London for that, because NYMEX will most times reverse whatever London has done. I say most times, of course there are occasions where we do have single direction days, and in that respect you will then see a partial fade into the London IB, and then another reversal and a continuation of the move. But nearly in all cases, whatever happens in London, NYMEX usually creates the high on the day. That is the norm. So I like to fade that. Okay? That's one of my strategies. I am generally short biased on crude, and I think that short bias is now creeping in again. And why? It's because crude oil over very long periods of time really likes to range in the weekly between sort of, back in the day it was like 75 to 50 range. Now I'm going to say that maybe 100 could be the creation of a new range. Just a guess, not any sort of advice. But I've had this idea in my head, just every time we go above 100, very few days we spend being able to hold above 100. So to me that kind of gives some sort of information. But at the moment it's just a theory, right? So we'll see whether that rings true or not. Time will tell. Time will tell. GC is moving oddly with icebergs to the downside. Troop says, well, does that mean liquidation? Maybe. It could be. It could be. It's not easy for institutions to remain positioned well. So if you see, let's see what the dome is doing on GC. I mean, it's not that thin, but I would say that this is kind of thin for gold. Usually you see about 7, 14, 20 contracts per price. And even though we're not too bad, I would also say that this is a little on the thinner side. You know, bigger gaps. So the big boys are probably not in the room with us. And I don't mean by weight, I mean in pocket size. So maybe just maybe they will be, you know, making their mark by liquidating some positions and then just putting the gold money into something else. But where they're going to put it remains to be seen. However, once they begin, it's going to become obvious. So yeah. Trading Nickel says the New York fade. I had some beginner's luck with that idea in my head later in the session, but wow, yesterday afternoon sure didn't want to fade up, up, and away. Yeah, we're talking gold or crude oil, because crude oil fell massively. Or equities. What are we talking? What are we talking? So you see the New York fade in equities, that would be on days when you don't have directional moves. And usually if you see a weekend gap and they start to sort of accept into the weekend gap, just don't stand in the way of that, especially not in equities to the long side, because that's not a great idea. So again, like anything, the post New York cut fade needs to have context behind them. And you know, if something is opening with a massive gap down and correcting into a huge mean reversion, obviously that tells us a very different story. And that usually you can see it usually by partial failed auctions that never even go like halfway into the initial balance. They just literally kind of pop into it, and then the euro close tends to be nothing. It's a storm in a teacup. So it's like a really muted reversal that immediately gets pulled back and typically ends as a buying wick, some sort of excess to that side, even though it's not outside of the profile at that point. But it's basically just a buying wick. So you don't want to see a buying wick on equities into the London close. Definitely not. That is a sign of a bullish market that won't go down, right? It's like, ugh. And similarly in crude oil, if you see, you know, a partial failed auction that actually kind of gets out of the initial balance, but it's all very orderly and there was no sweep, like a high velocity sweep below the reversal, I wouldn't stand in the way of shorts in that case. No matter how great the failed auction longs look in crude oil, that's like, But also in crude oil, you have this time-based thing where the later it gets in the day, the less likely the failed auctions are. So for example, yesterday, if we analyze where the initial balance was, you can see that this was the initial balance. So this was the start. And then the B period, so the second 30-minute time frame, which we lovingly call the B period. We like to assign letters to each 30-minute period. So when it opens, the first 30 minutes is A, the next 30 minutes is B, Next 30 minutes is C, D, E, S, F, and so on and so on. But usually you would expect crude oil to get out of the initial balance, usually in C or D period. Anything later than that, and you're looking at a potential for a bit of a directional move, or at the very least, a very boring move that is very contained inside the initial balance. However, once that time frame for the failed auction in crude goes by, you're more likely to see a move that will speak to the directional nature of the day. So if I go to place my sort of like, let's call it a developing back test here. It's not a real back test, obviously, but you can kind of see A period, B period, C period. So now we're building value, right? Now we're building value. We're not exiting the initial balance pretty late in the day, right? And then we get to this is C period, D period, E period, F period. Nothing. That's very late in the day. And then we get the euro close. And after the euro close, they start moving. Now, obviously, we had some news yesterday. In fact, we were wallpapered by news. But let me just show you something. Devil is in the detail here. I'm gonna make this like ultra big because we're not old. Not old. So remember, you couldn't see this on the day, but you could see the developing value. Where is the developing value? It's up here. What does the price do? Tries to get out of it, comes back into it. This is something that you can use on days when the market seems jammed into the same sort of initial balance area. Look for evidence of reversals around the developing value low and high. Now, this is a different view to going back a day and looking at where the price is opening in relation to that. Totally different. But once crude oil has spent like half an age in a day to like initial balance bound, you can then start looking at edges of the initial balance and how the price reacts. And because we didn't have an excursion from the initial balance so late in the day, it made sense that there's going to be some sort of an attempt at a gap fill. Now, yesterday we had some levels up at, I think 102.50 was my line in the sand. And I said if that kind of doesn't provide a proper sort of failed auction, longs and a continuation, if that goes, then I would be looking at more of that gap fill side. Unfortunately, I got slipped massively because I had a trade to basically try and get a new high on the day on crude oil, which was within my stats, but then instead of losing 350, I lost 600. And then after that, I was like, oh man, let's just leave it for today because this is not good. So now I'm just waiting for an absolute level later in the day rather than doing the 50-50s, which are coin flip during this time of the day, to actually do my next trade. And in the meantime, I just practiced the Shanghai fade, and I managed to grab a few ticks there. This was a crude oil shakeout. So here it was. So this was my trade. Crude oil downwards. It was a big crude oil because it's a combine. So normally this would maybe be, if I'm in an XFA, this would be, I don't know, maybe $450, $500 on like a couple micros. But yeah, and then we had test of the Asia low, prompt reversal, but I was basically just hunting the liquidity sweep into the London Open. And since then, I've been sat on my hands. I went to the garden. I had some sunlight on my face. But yeah, every time something spends too much time in a level, you could also apply this to P-shape and B-shape profiles. So when you see a day that basically just runs up completely. So that gives you direction. And then it sets into a new distribution curve. That's when you would look at these developing values. So you attach it to the open of the product. So this one opens up at 8 a.m. Central, 2 p.m. England time. So that's where I attach the profile. And then if I don't see any excursions out of it, or something happens that is like really odd, I will start looking at the developing value for trade locations. Ideally, I want them to match with some of my gamma levels, but not always, right? It really depends. So if you have, let's say, a topsy-turvy version of this, so a P-shaped day, where you had shorts liquidating, so that causes an upside move, and a very quick rise, and then a slowdown, what you would be looking at is that new distribution curve at the top, and then waiting for the value low, the developing value low, and then staring at the tape and order flow to basically be with the overall liquidation of whatever the institutions have done already, and then just going along with that. So there are many ways to, I had to work a lot on this because I'm a mean reversion trader, and I'm terrible. I was terrible at directional days because I didn't know how to approach them. So I kind of dug deep. I asked so many questions to people who were trading continuations. Well, Hogue was one of them. I had another couple of mentors in my life, and they all kind of gave me pretty good advice of how to approach the continuation days. So I've gotten better at figuring things out, but some kind of awareness of the developing value and how the market has moved up until that point needs to come into perspective, and not just have the whole, oh, it went up and must come down. This is not gravity. Stocks are not subject to gravity, especially not equities. And in fact, they are subject to going to the moon because they're designed to go up. They are used for pensions. They are used for long-term investments. Those kind of products usually go up. All right, now that I've yapped enough around the levels and stuff, let's have a look at chat. So I've already engaged with some of you. To get a live account, is it 30 winning days or once I've taken 5 payouts? Fletcher, really 5 payouts is more... Like, they had to put something on that page, but from what I know about their process is that they can actually call you up whenever they want. Sometimes after 1 payout, if they see that you're consistent, maybe they know you. So most of us who have been with Topstep for a long time, if we show any sort of consistency in like a month, and we kind of try to generate 10K, 15K, they will push us into live very quickly, right? But if they don't know you, then they might wait until the 5th payout. And the 5th payout is not like, right, now you're going into live, mister. No, it's not like that. The 5th payout should be seen as a potential, hey, you got on their radar. You're generating alpha, and they're like, oh, they're ears perk up and eyes perk up, and they go, let's watch this person. Some people don't get a call up after the 5th payout because the risk team feels they're not consistent enough, so they want to see more data through time. It's never just like, hey, let me full port and then get a couple of 100,000 in a month. They want to see consistency, how you manage drawdowns, can you drag yourself out of a drawdown, and how are you doing that? So it's very, very subjective. They don't have some rigid process where it's like 5th payout, now it's live. It's not quite like that. So I would just relax and focus on whatever it is that you're doing, and not stress about when you get a call up to live. And just, enjoy the ride, enjoy the process, love the process more than the profits, and you'll have a great career. So that's it. All right, let's have a look at those ES levels. I know that people are like, hey, we want your levels. And by the way, guys, I do have now, as a part of our, this is from my side of things, some market stalkers. That is my community. So I do have a YouTube channel. Now, we did connect our utility server to some of our levels, and I do have my anchor points for ES and NQ and everything, so I post those every morning. There is no narrative to it. There is no hypothesis. It's just literally, hey, we've crunched some data. This is where the institutions have either some anomalous positioning or just like a really thick, like open interests level strike that might be difficult to break through. So, you know, if you're interested in that, you will need to go and check out my channel, not Topstep, but channel. We are very kind of symbiotically connected at this point, but yeah. So let's just grab some levels from my ES chart. Now everything's pretty empty here because I haven't really looked at ES on Topstep TV for a long period of time. Alright, so we have 69.50 to the upside. There's a potentially kind of weaker call wall. I'm going to have a look at how the end of day snapshot looked like as well. So this is a weaker call wall. Where are we? Here we are. Now, at the end of the day, we have a snapshot of 69.50 actually being the gamma wall. But that's changed this morning, right? So I take a snapshot in and around sort of London Open in the first hour. And you can have quite a lot of positioning shifts as Europe starts waking up. But gamma wall or weaker call wall, however you see it, it's coming up as an important level in the options chain, 69.50. These are outright ES options. They're not SPYs or SPXs. Just wanted to make that clear. And then to the downside, I'm seeing sort of a protective put with a little bit of size there, but nothing too big, 6,900. So that would be kind of the bottom range. How does that look from a technical perspective? It looks like a... This would be interesting if we get the value high somewhere near there. Alright, so yeah. So you have 6,900 and then you have the volume value high from yesterday just at 68.93. For my money, this area would be very good to scan potentially. So it's not advice, okay? It's just what I would be doing with equities. To wait for a reversal, so stay out of the nonsense of mean reversions shorts in equities, which can happen, or may not happen. There are lower probability odds. But I would want to see the price returning to ballpark this zone. So it's not a singular price point, it's a zone. And then to stay bouncing with some wicks above ultimately 6,900. That would be a test and a reclaim of that area. So for me, all of this, even maybe a bit wider to capture this high volume area where a little bit of congestion was happening. All of this is where I would be waiting, like our friend Chameleon Bob over there, waiting to scope out some longs. So that would be a higher probability longs area. If we go higher, there is another possibility of a gamma squeeze. It is lower odds after a massive day already, so there is a chance that they smack into 69.50 and then reverse and then kind of settle into a bit of a tighter range. But I wouldn't be doing shorts there. In fact, if there is a slowdown and if they start to distribute in and around 69.50, I will be looking for where the developing value is and then looking for longs off of the developing value low. So not shorts, because that's against the trend now, but instead trying to skim a smaller sort of scalp to the long side, okay? Let's see. Yeah, Thought Feeder is saying it took 16 payouts before I was moved to live. Yeah, exactly. And yet for me, it took me 4 payouts in last year And that was all kind of done at once because I did 4 payouts out of 3 XFAs. So I did 1, then 3, and that was it. I ended up in the live account. It was a bit too soon, to be honest. But hey, it is what it is. So now I don't care because you get at least 10K in the live. So it kind of works out the same. Troop says, does your approach to crude oil change for today and tomorrow with it being contract rollover? It's unfortunate that you can't choose the front contract on Topstep X. I agree with that. At the moment, no. But I will still be looking for failed auctions in and around 100. But I'm not going to be expecting another massive swing. So that's the only thing that's changing. So rather than me going, ooh, we're going to go into a mean reversion long, instead of it's going to go for another 700 ticks the other direction. I'm not going to do that to myself. I'm just going to go, okay, so let's just wait until the high probability time and then see if we can skim a few ticks here and there. And a few ticks for me would be about ballpark 150 in this sort of volatility. When crude oil was like a snooze fest last 18 months before this Iran conflict, that number would be more closer to like 35 ticks. So you can see the difference. But yeah. So that's the only difference. I'm not looking for a lot, but I'm still looking for the same setups, same playbooks, failures of the auctions, and all of that good stuff. Maybe like hunting of liquidity, obvious highs and lows, typically lows because I'm going to be short. And I'm not really looking at any longs to fade the big move. In fact, I'm going to use the longs to let them shake out, and then I'm going to look for the failure. So I do have a bit of a bias on crude oil today. But it's not going to kick in until we're well over 100. So 100 is the minimum level. And then, you know, if they want to go up to 102, that's fine. That I'm, you know, it's that old thing, well, I liked it at 100, I'm going to really love it at 102, right? And then I'm going to try not to put too many holes in my P&L, which is why I'm going to try and hold off until this high probability time of day in and around the Euro close. If nothing happens then I'm going to see if I can wait until, you know, my 6 p.m. So kind of like the last 90 minutes of NYMEX, I suppose. What do I usually do when you see an unusual order just getting filled? So on my products, that is typically a sign of some sort of a sweep. Now, sure, it can mean a gamma squeeze as well through a level. But most of the time, for my, the way I look at things, I will have, like, let's say we take the Asia high here, and it's a really tight range on ES, but let's just kind of do the same. There we go. So to answer Khadija, I forgot whether I read the Y as a J or whether I read it as a Y or not read it at all. I'm so sorry. I know you hear all the time, that's just on me. But you have a great question. So do you take Tokyo or Shanghai high-low? Great question. Tokyo. So I take the Globex high-low. So as soon as it opens, wherever the high or low is created, that becomes my low or high. And then I only take the Tokyo high or low, not Shanghai. Shanghai take profit is the setup that I'm taking on the basis of an attempt through the Tokyo high or low and a fade. So that's my little scalp ahead of London, always. So Tokyo and Globex start, and then wherever they make a high and a low in that time frame. So for me, that would be 11 p.m. and then it would be right now 7 a.m. close. When we are in the November to March period, Tokyo does not change with daylight savings. So after November in November, Tokyo starts to open at midnight and ends at 6. But the open is still 11, so it's a little bit of a weird time with the daylight savings, unfortunately. So you just need to be aware that Tokyo does not change their clocks. But great question, yeah. So Vital what do I normally do? I usually try to see whether I have a level there. If I don't have a level, I'm not particularly interested in it. I'm just like, okay, cool, some big orders went off. But if it's an Asia high, Asia low on metals, for example, or if it's post-NY cut on crude oil or gold, and then they failed the auction with those bunch of orders that kicked off, oh yeah, I will usually try to see what happens after. The thing with order flow, guys, and tape reading, it's always like you see an event, like you see liquidity somewhere, and then you see something happening immediately. But you're not supposed to jump in immediately. Order flow is all about the consecutive action after the event. It's not like, ooh, popping off orders, let's jump in with them. No, it's, bunch of orders kicked off. Let's see what they do next. And I take that next clue, or whether it's continued absorption, or whether it's maybe continued buying or selling through the level, and then I will make my decision. It's like yesterday we had a gap fill, right? So it wouldn't make sense for me to go, ooh, large orders have kicked off on, let's say, ES in the, on the long side. So you had sweeps with the direction of the gap, or against the direction of the gap, and then they just kind of kept going and kept going and kept going. So you don't fade that. Why? Because you have consecutive buyers who are doing the sweeps through levels, and they're just munching through all of the technical levels on the way. That's usually a sign of some sort of a squeeze, and don't stand in front of it, unless you like getting slapped in the face over and over and over. Yeah, so you really want to be, you really want to be more, like if you do want to take a punt against those kind of movements, trade small and don't try to trade with a lot of size or like some massive stops or whatever. Just, give it a go. That is the see money, take money thing. Scalp against the directional move that might be happening. And then just go, okay, well, that didn't work, but at least it's just a paper cut. So, you don't want it to be a punch in the face. You want it to be more like a bitch slap. So make your losses a little bit, don't make them. Does that make sense? Is that like very graphic for you? All right, so let's see. Joe says if you pass the eval, you get punished. What? Account fee. And after you have some payouts, you get punished again. Like, you think live account is a punishment, do you? Okay, Joe, let Granny D tell you how it used to be in prop firms. Story time. So yeah, the buy-in to become a prop trader without a track record, which is what I'm guessing most of you are, with no qualifications, no Series 3, no Series 7, no any series, right? 0 series. You would basically be looking at putting a collateral with a prop firm. Now, this collateral sometimes came in the form of, hey, we need to give you some education, which, by the way, is going to cost a minimum like $5,000. And then on the higher ends, if you were just coming in and you want access to a prop firm risk tools and everything that they have to offer, it would be upwards of 15 to like 25K. That was known as collateral. What do we have now? We have fees where you pay $200 plus maybe another 100 if you go for the standard. No, obviously now we have 0 activation. And so you pay maybe a little bit more. So that's a huge difference, right? So would you rather that all of the prop firms that we have now online go away and we go back to the brick and mortar system? Do you really think they're going to let you through the door and give you any sort of funding without you putting up a collateral? Hell no, okay? Hell no. And it was so much more expensive to get into the industry without anyone knowing who you are, without having a profitable track record to begin with, or any sort of track record, no real knowledge about what the hell you're doing. This environment, like, I feel that people that have come up without knowing what it used to be like, you have no idea how good you have it right now. And then once you got to the prop firm after shelling out this lovely collateral to the tune of 5 to 25K, you would then start trading and they would slap you with a desk fee. Now, if you have a losing month, the desk fee doesn't go away, but the company kind of keeps it there because they paid for your desk fee, which, by the way, was about where I worked was usually around 3K. I think Jack had it the worst. I think they had like $5,000 a month. However, if you have a losing month and there are no profits, that just gets put on the back end until you have a profitable month. And then they recoup it from your profits. That was a lovely system. So if you think that prop firms nowadays, no, it's scam, it's that. No, you have no idea how it was. And this whole XFA, which is basically a demo account, and you getting live actual money from it, real money from it, that was never on anyone's bingo card from us who are from the old ages, right? That was impossible. It's like, opening up an AMP account that's demo and then going to Dan Culp and going, hey, who's the CEO, by the way? Hey, Dan, can you pay me out $5,000? Because I made that in the demo on your company. And the guy would just be like, dude, what have you been smoking today? That's where we are, okay? That is the twilight zone that we will live right now. You trade in an XFA, which is a sim environment completely. Yes, we paid a little bit of money for it, but it's a sim, right? And then the firm assesses you in your performance, which is what we're doing here, in order to push you into a live account. Now, live account, it has a lot of benefits, okay? First of all, you have the risk team that will be very much open to discussing the limits, but also protecting you when you go a little bit off the rails. You can always call someone up as well. Like whenever I was live twice, right? So whenever I was struggling, I actually called Mick to cry on his shoulder, right? I was like, I don't know, Crude Oil has died. What do I do? Like, it's hard. And he was like, well, I looked at other products and, you're very good at like other products. Like he was really uplifting, right? Like who else are you going to cry to apart from your risk manager? That's, one of the huge benefits for me. And you have to look at the whole process through the eyes of what the markets really are. They are live markets. All of the stuff that we're doing on the sim side, it's great for education. And it's great for coming up with your initial live capital. But you can't be a sim farmer. Sim farmers have ruined our industry. The reason why everybody's coming up with rules left, right, and center is because the sim farmers have rinsed everybody, right? So now, all of us who didn't do that, we're like, oh, wasn't I stupid? Right? But it's like, at the same time, they've harmed the rest of us who have just wanted a little bit of extra thing on the side. I usually use prop accounts for, like, whenever I need something. Usually, I will, need new floors. That usually comes out of prop. Or, I want to put aircon somewhere. That comes out of prop. Or, maybe this month I want to take some money out to pay for the doggy school for the next few months. And, stupid things like that. But it's not like, hey, let me get wealthy. However, that's nothing wrong with that. I had my heyday of trading with size and everything. And those days are, I've been doing this for 20 years. And it's like I don't really have this hunger. I don't go anywhere. My life is pretty small. I have a chronic illness. I have 8 dogs. I have a beautiful home. I don't really need much, to be honest. I really don't. I think that my life is fairly just normal, not flashy. Yesterday, who was it? I think Hogue asked me and Anne-Marie whether we had like some crazy weekend. And I'm like, yeah, living on the edge with my sparkling water and an electric blanket at 9 p.m. So it's like that's, but the fact that we have this opportunity to scale up through like copying accounts, that's a double-edged sword. For some people who are doing that too soon, I would say that you are actually just increasing your upfront costs without actually having the skills to keep those XFAs. So I would first work on one account, one XFA, trying to keep that as long as possible, then think about scale-ups. But no, the trader these days, we are in the TikTok era where everybody's got a attention span of like 3 seconds, and they can't retain any information. Everybody seems to have some mental issues as well. I don't know what that's all about. This is coming from with the greatest love from a Gen X woman, and it's just I don't know, I feel like people have gotten weak-minded, and I'm just seeing new generations that are just not as strong. I don't know, it's just how it is. And with that came a very spoiled trader who's taking money out of the demo accounts that are copy traded, so multiplier is applied, and it's like, what is this, a video game? So what, you just get some sort of a cheat code and you type it in, and then suddenly you have 5 accounts, and even though you've only made 300, now that's times 5, and that's now real life. And I'm sorry to say this, but at some point this will go away. Just mark my words. What is this? 14th of April, 2026, because there's signs that regulators are like, hold on a minute, what the hell's going on over there? Like, what is this demo real money thing payouts? So just mark my words, if you don't train yourself to manage one account properly, once, all of this goes away, you will be in a very difficult situation. So prepare yourself, prepare your skills. This is luckily not a job skill. You're not working 9 to 5, so nobody's forcing you with a stick to sit there for 12 hours a day. And it's just, prepare for everything. So be good trading one account. You can have multiple accounts, but also know that you need to have the skills to maintain a single account. Because this whole boom and bust cycle, I know that it's been 5-6 years now, because this really started happening in around COVID. It's a very new thing for me, because I've been trading for nearly 20 years, and it's only been a thing in the last 5 years. But in those 5 years, you've had 18-year-olds that are now 23, 24, or 20-year-olds that are now 26, 27, and they've grown up knowing nothing different. They've never traded in a live account, and yet they've extracted extraordinary amounts of cash from prop firms, claiming that your only risk is just the money that you spend for an eval. But you put those people in live, I can promise you they won't survive, because they're used to blowing up accounts. Some hit, some don't. They get a payout from those that did hit, and then they go, well, that's my risk, right? $200 that I paid, not the 300,000 that are just blown up on 100 accounts. It's like, so just mark my words. This is an extraordinary situation. It's a golden era of prop trading. And no matter how much you think that Topstep has done you wrong by doing whatever, we're just preparing for what's to come, okay? Because, they're not stupid. Topstep have been here since, I've been with them since 2015, but they've existed since what, 2010, 2011? They know what they're doing, right? So that's all I'm going to say. Anyways, rant over. Let's get back to levels. And if you don't like prop firms, you don't want to trade live, yeah, absolutely. Take your money and go at it yourself. Nobody's stopping you from opening up, an account by yourself. No rules there. No payout days minimum. No profit split. No nothing. You don't like it? It's fine. There's other choices. Just know that in that case, you take all the losses. So your loss is now no longer $200 that you paid for prop. It's going to be the initial capital that you put into an actual firm. And you should be doing both, in my opinion. But hey, that's me. I do both. So, yeah. Millionaire mentality said, and what's wrong with that? Props are made to learn and milk them to build your own capital. Yes and no. There is a limit, because what some individuals have done is to harm the cash flow of prop in extraordinary high volatility. So while there's nothing wrong building your wealth, exploiting the system in order to basically pad your cash, your pockets by YOLOing accounts, blowing up some, full porting. That's that is that's the problem. That's the gaming the system, behaving as if this is all just the prop firms are there to be rinsed. It's like, no, the prop firm is your partner, and you need to respect your partners. If you don't want a partner, you don't have to have one. Very simple. Hermes says, D, why don't you move to Dubai? Not in a million effing years. First of all, it's a desert. I hate hot weather. That's number one. Second of all, I've done so many gigs in Dubai. I'm sorry to say it's a weird place. Third of all, I like to have a drink every so often, and I don't want to be in a hotel as I'm doing that. And maybe, just maybe, I want to have a little late night walk with my dogs and not worry that just because I had a couple of drinks that I'm going to be locked up in jail as a harlot and somebody who's disrupting everything. It is not a good place for women, I don't think. There are modern parts of Dubai, but there's also the old town. And I'm sorry, but that's just like, it's not for me. It's not for me. I grew up in a very liberal family, and I like certain liberties as well. On top of that, we do have 8 dogs, and I do know that some Dubai places have like indoor doggy schools. I would never put my fur kids through a desert-like situation, and to never feel the real grass on their feet. I do pay high taxes in the UK, but I love living here. I live in a beautiful countryside. It rains a bit more than normal, but when the rain is over, you have beautiful greenery, you have trees, you have fresh air, you have amazing everything. And you don't have to worry about certain cultural differences, because, English might be a little bit cold, as people think, but they're not. They're actually a really fun bunch of people, and their humor is unmatched. They like to have a good old drink with people. So yeah. What country do I live in? I live in England. And I am a British citizen, naturalized many moons ago. And I call the UK my home, by choice. So yeah. So yeah, many people think Dubai, taxes. I don't mind paying taxes. What is this thing about trying to avoid taxes, people? You don't pay taxes. Okay, great. But in the UK, you get free healthcare. You get the councils doing all the rubbish and a whole bunch of stuff that, nobody ever really does elsewhere. You get, the state pension. Yes, you have private pension schemes as well that are awesome. And you just get a lot of freedom to live your life however you want. But yeah, to me, I never ran away from taxes, and I couldn't care less that I'm actually proud to be in the higher tax bracket. I think that's an achievement, and I don't think that's anything to run away from. Every time I see people running away from taxes, I'm like, mate, like, why are you doing that? Like, what else are you hiding? I always see them as like dodgy people. It's like, why would you even want to go there? It's like, oh, I don't want to pay taxes. Why not? Why not? Don't get it. I'm sorry. Every time I see that, it my blood boils like immediately. I can go on another rant about that, but I'll try not to. Yeah. Bjorn says, I'd rather live on the moon than in that bit. It's just, I don't like hot weather. That's the primary reason. It's not, Dubai is a beautiful town. It's a very futuristic city. So whatever they've done in like the architecture stuff, and it's gorgeous. Okay, I'm seeing the bounce from VWAP in ES now. So I'm kind of leaning towards that idea that we're going to retest 69.50. So that's 1, thing. Copper, there's nothing here to trade, guys. Look at this. Tiny Asia range. We wicked above Tokyo high, failed it. Now we're at VWAP. Maybe later, maybe if we kind of reject the VWAP and keep going higher, because I am a little bit more biased towards the long side. Maybe that's something there, but I'm not really seeing literally anything here. Crude oil, we're waiting for 100 today. At the very least, 99, but I think I'm going to wait to 100. If they want to wick it all the way up into this thicker area of volume, so be it. But yeah, anywhere above 100, whenever order flow shows me, I want to be short there. Victor says, come here to Greece. I am part Greek, mate. So Greece is very hot. Greece is very hot for me. I can't do temperatures where you can't get out until like 4 or 5 p.m. because the sun is like in your face. So to me, I need like fresh air. I need coolness. I can handle just about like 1 month of hot weather, but honestly, as soon as UK goes into like some sort of a heat wave, I'm just like, who can I sacrifice to make this big flaming ball in the sky go away? So that's me. Dee, can you explain what you look on the order flow, please? Multiple things. So some of the stuff that you might want to look at would be a sweep, so a quick velocity pop either up or down through a relevant area, and then what happens after. I have a sweep indicator or book map that kind of helps with that, but you can even see it when you're like looking at the real-time price action. Would I mind staying in the US? I've been to the US many times. I was in Chicago. That was on the other side, so that was too cold. I went to Los Angeles quite a few times, San Diego, New York a couple times, Vegas, of course. I got married there, but I wouldn't live there. Again, US has their own problems. Don't like the whole guns thing. I hate guns, and I come from a war-torn country, and guns are not fun for me. Okay, guns are like to kill people, and I just don't think that should be like, oh hey, we had a bit of fun, we were shooting guns, and it's like, okay. So that's one of the issues. Second of all, no free healthcare bothers me. If something happens and you need like emergency services, I don't want to be at like, point of sale sort of thing going, so we fixed your leg, that's your bill. Can't believe that's still happening in a first world country, frankly. So very disappointed on that front. And I think America can do better there, to take care of their own people, to have some sort of a national health arrangement where people don't have to go into medical debt to get treated. It should be like a basic human. So I have beef with the States as well, and that's why I don't live there. I can come to visit. It's always beautiful. I always have a laugh, and complete great times, and just like awesome people. Again, great humor. LA is a bit weird, like there's a lot of beautiful people, but then suddenly you see some people who don't match that, and you're like, oh, so it's not all actors and models, I see. But yeah, and everybody is an actor or something. Like one time in LA, we were in Santa Monica. I can't remember what that street is called. Like it's kind of like it's a pretty long, starts with A something. There's like a whole bunch of little shops and stuff and everything. And I walk into a dog shop. So it's like a pet shop. And this beautiful woman looks a little bit hippie. So she's got like obviously a well-developed business. She's got like celebrities shopping there for their little pooches and stuff. And beautiful like leather collars and like some really, really nice kind of high level, almost artwork, but for pets. And so we're talking, I was there with a friend of mine, and we're kind of just chatting, and she goes, yeah, no, I'm working on this, how does she put it? I'm working on a performative dance, and there are 4 cellos, and I have this whole concept about me doing a performative dance. She just kept going on and on about stuff that she's doing outside of her business, and I was like, that's odd. And it's really true. Like, you meet a doctor or something, they're like, yeah, I'm just doing this for like on the side. Really, I've got a script that I'm trying to sell to like James Cameron or someone. It's just, it's an odd place. It's an odd place. A lot of creativity, but a lot of weirdness there too. So yeah. That case is always beautiful. Great people. Yeah. Love the UK, but it ain't the same no more. Yeah, I will agree. UK has changed. It was a lot more fun. That's why I moved out of London, because I think London's gone a bit pear-shaped recently. What sort of doggies do I have? Well, you can kind of see the puppy cam sometimes in the back. They are one Pomeranian Wolf Sable. She's the mom. We have a King Charles Cavalier that's ancient, completely deaf at this point, but still alive. Then we have their 6 kids. They're Cava Poms. So we have 2 big giants. They came out massive. I don't know why. Can I see a NQ levels? Yeah. Let's have a look at NQ levels. Again, I don't have anything on this chart, but I can talk you through it, and we can put a couple markers. Don't like NQ myself, as you guys know. But since we're just pulling up potential levels, I can't imagine it's going to be too different than ES, because they've gone into a lot more sync. All right, let's see what we've got. Yeah, so 25,750 would be kind of an equivalent of the same level in ES. So a little bit further out, right? Whoops, what have I done? How did I do that? That's weird. Okay. To the downside, we have 25,500. Now, interestingly, that's also the average session range London low. So that could be one area of interest to look at. Let's put the coordinates for that. It's a weaker put level, but I would say that it's a kind of a protective put more than anything. If that goes, then maybe we might see some deeper retracement through those levels. But similar as ES, right? So here is the value high, only a little bit amplified because it's a more volatile product. So similarly, value high sitting right at 25,433. But in equities, you do tend to have this penchant of testing the session highs as a means of a gap fill. And that would be a little bit closer to the 2550 level. So there is a single print. This was a late spike. So this whole area becomes an area of interest. Retest of the late spike can definitely be something to look at. If the 2550 level breaks down, then also watch out for the value high, which is sitting right under it. But very similar. It's just like slight amplification in the distance 2 levels because NQ is more liquid. If we go into another mad rally, I do have a gamma wall from the monthly options chain sitting all the way up at 26,000, but the average daily range exhaustion is just under it at 25,950. So we have plenty of space. 950, so ballpark there, that would be your ADR high. Now, when I say ADR high on equities, that doesn't necessarily mean that once we get there, you fade it, because this is an equity index. If we are getting to ADR high, and to a potential gamma wall, again, the best way to approach that would be to wait until the market starts creating a new distribution curve on the developing volume profile, and then to use the low of that developing value for potential pump back upside. Okay. Vital says, hey Dee, tell us dating advice for guys in finance. I have no idea, man. I've been married for like 20 years, dude. 21 almost. Victor says, I have a little girly American Akita mixed with Malinois. This is a big doggo. Oh, beautiful. It sounds lovely, actually, because Akitas are quite hairy. Cop says, we've got a lovely old English bulldog. Can't go wrong with a bulldog, man. Where do I tag my volume profile? What time frame or session? So I tag them to whatever the current active session is. So for example, on NQ, I will be tagging London Open. So go back and find where London opens in your time. For me, it's 8 a.m. And then you just drag it to the edge. Why didn't that work? What is happening? Let's try that again. It's not letting me drag the volume profile for some reason. That's weird. Yeah, but usually you find it and then you drag it to the end. Unfortunately, it doesn't keep it up with like the new bars, so you have to keep doing it yourself. That's the only slight annoying thing. What does single print mean? It's kind of similar to an FVG. In fact, before FVGs, we had single prints, but it's the same thing. It's a strong move that has a distance from one candle to the other candle, and it leaves that distance. So there's a gap. So you can see here, it kind of looks like a hole. It's like if you were coming in from like walking, and let's imagine this is a mountain, because we got, distribution curves that look like mountains. And then you kind of go, ooh, it's raining. Where do I go? Ooh, there's a cave. Let me go in there. So it's a cave, right? But that cave, the price can pop into it, and on the first try usually reverses. Now the more time the hole gets tested, the weaker it gets, and the more chances of it filling completely. So it is an area of lower volume where the prices moved quicker. This one is more relevant because it is a late spike. I'm sure Hogue is going to cover it because I know that he's seen it. 3K up. What did I trade? I traded a liquidity grab on crude oil shorts into the Tokyo low and take out. So yeah. Copros says, hello D, I've noticed my trading being worse the last month. Do you, with your experience, think the current market is more challenging to trade for less experienced traders due to news flying around? Yes. Yes. It is a lovely market to trade for those of us who have been around the block a few times. Unfortunately, with newer traders, you still haven't been through the ringer, right? So most of us have been around. We've lived through multiple disaster events. So I've lived through the credit crunch in the first sort of year since I started trading. Then I went through the austerity measures. Then we had the quantitative easing that carried on for like so many years. Then we had COVID. Then we have tariffs, and most recently the Iran war. And then in 2014, we also had the crude oil crisis. Each time there's some kind of a black swanish event or wars or something, it exposes the issues that you have in your own trading. Okay? Stay with me. It means that if you're not doing well because of the news flying around, you need to look at your trade locations. Because from what I've seen, the moves are still very technical. And they still follow exactly the same patterns, but in a vastly elevated volatility. So that means that for me, I will keep an eye on news. But if news hits me, there's only like, I don't know, maybe about 10% of the news that don't go to the next logical options level that I've already identified, and then they bounce from it. So that's the whole point of me looking at gamma levels, to see where the dealers are positioned. So no matter what happens, the dealers have to go where the deeper liquidity pools are. It's just how it is, right? And they have to do something there. They either have to reverse, so they will be underhedged, for example, so they have to like quickly adjust positioning, leading to a mean reversion. You've seen those jumps in crude oil where everything will like crash and then boing, as if it's like a yo-yo, comes right back up. What do you think that is? It might be caused by Trump, but that is the dealers adjusting. Now, if the market just slices through multiple technical levels, that is the time when you're like, whoa, what's happening here? And then you need to sit back, not continue to trade, but sit back and see which levels it sliced through and whether you would have been able to somehow still stay on the move. Let's say you got shaken out, got stopped out, but the move happened exactly as you predicted. Have a look at what stop loss size would have survived the whipsaw. And then take that into consideration, because it's very likely that if you're getting stopped out in the moves, you're either on a completely wrong side of it, or you are looking at maybe tiny little stops that are not scaled to the volatility that we have at the moment, and therefore cannot absorb any kind of a tape bomb. Gamma levels, you're looking at 0 DTs or weekly. I'm actually looking at monthlies, Mohammed. Because for commodities, listen, for commodities, they don't change that much. Like, there's no, like, 0 DTs, like, they do happen nearly every day in commodities. So I feel like they're not as important, if that makes sense. Because gold has, like, option expirings daily. So it's like, how relevant is the 0 DT? And it's already a slightly thinner positioning market. It's not like an ES or something where you have 1,000 contracts of open interest sitting at a particular strike price. It's not like that. Like, just to read out, because one of my indicators that I have on the back end, I wanted to see how many. So for example, a moderate call wall on gold at 4,900 is 44 contracts. That's it. But it's a moderate call wall. Then for a gamma wall at 5,000, we have 100 contracts. And that's enough to be like a really solid resistance, if it ever gets there. And then if I look at ES, let me find the chart somewhere. Almost there. I have a lot of charts, so give me a break. But on ES, we have SPX and SPY that has 1,200 options sitting there. That's a lot, right? Now ES is thinner, obviously, so it's going to be more like 21, 84, 19, and then, weighted by that. So it's a thicker market, much thicker market. So yeah. The Swamp Demon says that's my problem there. Not large enough stop loss. But that's easily fixed. Just widen your stops, yeah. Frankie says, D, can you explain why price always hits my stop loss before going to take my profit without me? For the same reason that we're talking right now. Too tight stops. Maybe execution is not perfect, but it doesn't need to be. If you're not perfect with execution and timing of the entry, you absolutely need wider stops. So try sizing down, increasing the stops. So I would take, let's say, ATR on the daily. No, actually, let's take ATR 9 period on a 30-minute and use that as your stop loss guide. So for example, right now, NQ, that means 27 points. Round it up to 30 points. On crude oil, it means 75 ticks. But it's a London session, so it's going to get crazier. On something like gold, let's have a look at gold. 144 ticks for a stop loss. So have some sort of a way to kind of scale your stops to the volatility of the product. And get back to us, Frankie. Tell us how you did. So yeah. Alright, so we got a few minutes left here. Obviously no trades for me because I'm waiting to see what they do with this. And if I'm looking at my products, everything's a little bit jammy at the moment. So this is very flat. Crude oil trying to get crawl back outside of the Asia range, but nowhere near. So we need to wait until it's closer to these levels. Copper, probably a range bound day today. If I had to like, how did Emily put it once? Gun to head, fork to mouth. What would you do? So yeah, I'm thinking a range bound day. Copper says, thank you, appreciate your feedback, it's invaluable. Happy to be here, man. Surely, this is what we're here for. Personally, I scaled down to strictly one MES micro. Very smart in this volatility. Market is given even more valuable lessons when volatility is high, I think. Yeah, 100%. Hit the nail on the head there. Shubham, hello, mate. What's up? What's your advice for someone like me who is profitable for a year? Been 6 years trading full time. Now, should I scale position in futures and shares? I day trade. Well, I mean, it depends, right? So I would probably try just scaling super small. Like if you're trading, I don't know what your position size is, but I would maybe try adding like 1 micro, see how you do. And shares, I don't know whether you day trade shares, but you know, same thing applies. Just when you're scaling up, think more like, hey, if I was in with 3 micros, let me add a 4th one. Rather than, hey, I was in 4 micros, I've done well, let me go to a full mini. Don't do that. Don't do that. Can I go over some of my trades? It was only 1 trade. I can go over that really easily. So CL was the big one. Oh, interesting. Put a contract. It was literally, so the thing that I always talk about, right? So we had, because crude oil, what it does for London, it will usually hunt the liquidity from the Asia high or low. So this was the trade, right? So I woke up very early this morning. I was up at 7 to give my Cavalier his first set of meds for the day because he's in heart failure. And then I was like, okay, let me just have a look. Like my XFA is locked out until later in the day because I didn't want to trade this part of the day. But I'm like, let me take a punt. And remember, this is a combine, so I do take a lot more of these punts than normal, but it's the same trade that I take and talk about all the time. So whenever you see me coming into the stream with some profit, that will be a result of something like this. So there's 2 ways to execute it. Now, first of all, when London opened, I looked at the order flow, a lot of red, right? Immediately they started kind of bunching in. So I just executed 3 crude oils, big ones, and I just wanted it to take out the low. Once they took out the low, I took my profits. That was it. Like the end. 1 trade, 1 and done. Profit in here. Don't do that. I can do that because I don't really care, right? It's not the way to learn. I do that because I've done this trade like 500,000 times and I know what I'm looking at for. So if I don't get it, if it starts to kind of get to VWAP and then just starts going higher, I'm out. That would have been a slight loss, right? I wouldn't be holding it to a stop because it should be a quick trade. It's a liquidity grab, stop, run, and reverse, and that's all you're going to get. Now, sometimes, if it's metals, I will actually take a similar trade where I wait for the sweep, and then I will try and grab it upon the return, and then grab the entirety of the range, or at least 50% of Asia range. Depends on what we have. This Asia range is pretty small because it's crude oil. So compared to the overall average ranges, this is nothing. But that was the trade, like literally 1 single trade. Same setup. Shanghai, take profit, smash through the high or low of Tokyo, the end. Sorry to hear about my dog. Listen, he's doing well. He's still alive. He has some good days. He has loads of good days, and then sometimes he struggles. But he's still alive. His CHF is well managed. Not easy to see him when he's like struggling with something. And yeah. Simon says, your 100 core wallet GC and GC 5000 feels like those levels are screw up levels. Our money we sold, we're gonna push you down to keep the premium. Yeah, but that's not out of malice. Okay, so let's, for the end of the stream, for the last few minutes, let's remind ourselves what the market makers are there for. The dealers, the big bank dealers that are there to take money. So they're not there to go, hey, we want to take your premiums. A dealer's position needs to be what's known as delta neutral state. Basically means they need to be flat with their exposure. But they also need to fill a certain amount of volume, which is mind-bogglingly massive, okay? I worked as a market maker at a very junior position. I absolutely hated it, personally, because, you know, first day on the job, they were like, all right, Dee, so you've got to fill like 1,000 lots today. And I was like, excuse me? They're like, yeah, that's your quota for the day. You have to fill 1,000 lots. I was like, so I tried. I really did try, but it's not my style. Like, I don't know whether I lasted like a month. My eyes were bloodshot. I was so stressed out. It's just not a job for me. But basically what a market maker does, they will have like one core position that will typically be a short option. So they write an option. Sometimes it's a short call. Sometimes it's a short put. Here comes the news. What is this? Now this is a news scandal. Iran ambassador to China. No arms shipment from China was sent to Iran. Was that it? Somehow I don't think that was enough. Maybe that was it. I don't know. We'll find out. But yeah, so the dealers will have one core position. And then think about it. Like let's use 100 as a... No, actually, you know what? Let's use 95 on crude oil as an example. Imagine that there's a 95 level strong. Don't think there is today. There's a massive gap once we lose like Tokyo low. But imagine this would be a short put by a market maker. So as long as the prices are staying reasonably above, they don't need to do too much to remain neutral. When the prices get close to their short option, they suddenly need to adjust inventory because it's getting a little bit on the screwy side, right? So they now need to buy more. But let's now imagine that something happens because they can be caught off guard as well. They're not some like wizards who are like, oh my God, I'm never wrong. They can be very wrong. Oh yes. So what happens then? The prices start going heavily below their short option. They don't want that, right? So they have to remain neutral. So what do? They start shorting outright futures. Why? Not to mess with you, but to stay neutral. That is the only thing that the market maker does. They don't care about your stops, but typically your stops are located at the points of deepest liquidity. Most people, when they look at something that created a low during the Globex session or Tokyo session, they created a low there. Where are they going to put their stops? It's really not rocket science, right? They're going to run their stops. How? Like this. So where's the point of deepest liquidity? So you have a whole bunch of people. Let's get a little emoji here. Get a whole bunch of people sitting there with their retail stops and thinking, ha, I'm so clever. Ha ha, I'm so clever. And then you get the market makers that generally have basically a big advantage because there's like this huge asymmetry between retail and and institutional. And everybody thinks, yeah, I've got it. But the more people think they've got it, it builds what? It builds orders. It builds liquidity. So then the market makers come in and they go, well, all of these guys are here. So what do I need to fill my humongous amount of transactions? And like some of these guys, they make like millions per day, right? Millions per day. That's what they do. Nassim Taleb being one of the best market makers in the world. Some of his opinions are a little bit out there and he drones on a bit, but he is very good at what he does. He's a multi-billionaire, right? And this is what they do. So they go, hey, whole bunch of retail stops there. They don't think about that. They don't go, we're going to take this guy's stop. No, all they see is like, well, there's a bunch of liquidity down there. Let's go and grab that and then execute a whole bunch of inventory, adjust inventory, and then you see a bounce back. So it's not done out of malice. That's their job, okay? So if your stops are getting wicked out, put your stops further out. Put your entries where the lows are. Put your entries after the sweep. That's what I do. Wait for the sweep. Look at order flow. When you see them piling in, that's your sign to step in. Then you're trading with the market makers. You can't trade against them. Like, trust me, that's impossible. Anyways, I'm going to finish it here. I will not be on the main broadcast today, but you will see me again for the metal markets tomorrow and for group coaching as well. So we're going to hang a little bit more. I'm going to make space for the opening call, so enjoy Mr. Hoagland, probably Jay and JD, maybe even Ray. And I will see you again very soon. Keep your ears open, keep your eyes peeled on financial juice, but when the tape bomb comes, don't freak out. Look at it as a learning opportunity, all right? Widen your stops, see what happens. Small size, wide stop. What's the worst that can happen, right? And then try to see how the market behaves in light of that the more room you have to do something. That's all I have for you today. Thank you so much for sharing your time with me. I really, really appreciate it. This was the Metal Markets on Topstep TV. I'm Market Stalker D, and I will see you very soon. Take care.